Good afternoon, everybody. This is Vickie Pizzarelli with Engel and Volkers. Welcome to Coffee Talk with Vickie. Again, we have Jon Bellemore, sales manager at Embrace Home Loans here, and we're continuing our series towards home ownership. And what we've been through, everything as far as how to build your credit, different types of loans, the process with that, the programs that are out there. Now, what if you have a house that you really fell in love with and it's time to put an offer in? What are you supposed to be doing at this point? Hopefully, you got your pre-approval from Jon already,
Yeah,
and that's the biggest first thing that you need is the pre-approval. So, Jon, welcome. And for people that don't know anything about you, tell us a little bit about yourself, and we'll take it from there.
sure. Thanks, Vicki. Yep, I'm the sales manager here at Embrace Home Loans in Rhode Island. We're on Main Street in East Greenwich, and we are essentially brand new in this office space. We opened this in November, so really nice to be here. I'm happy to be down the street from you, Vicki, and yeah, we're talking about, again, how to make that offer. As you said, we started off at the basics, what's a credit report, what scores are good, DTI, debt to income ratios, what programs are out there, seller concessions, like how much can the seller help pay for your closing costs and that sort of thing. So assuming that we've gone through all of that and you have a decent baseline understanding, you've gotten your pre-approval letter. So what do you do? So essentially, how do you make the best offer? I always like to start off when I'm speaking with clients on who just have the pre-approval letter is to go that one step further. Don't just get pre-approved, go and get the full approval. And the only reason I say that is because if you only have the pre-approval letter, usually they're pretty loose. Maybe your loan officer looked at your pay stubs, your W-2s, and your bank statements. They breezed over your credit report, but it's not anything that's underwritten. It's you don't have a letter, a commitment from your lender that says, yes, you are good to go. You're golden. Now all that we have to worry about is the house. And that's what the commit letter does. It goes beyond that pre-approval. We like to call that approved to move. That's our tagline here at Embrace Home Loans. And it allows you to get ahead of all of the other buyers that are out there. It's a much stronger offer. It allows you to waive contingencies without risk. And it puts you into a much better buying scenario. They say cash is king. Approved to move is second best.
And in a market it's still a hyper market for sellers, it's really important to have a solid approved to move certificate, because you're actually 4 or 5 steps ahead of the game. Your offer looks so much better to the listing agent and the seller. So it's really a great program that you guys have there.
Yeah, I would say 90% of other banks or mortgage companies, they don't offer anything like this because it requires a lot of overhead, right? If you're not under contract, generally speaking, why is a business going to spend time and money and energy getting you through underwriting if you don't even have a property in mind? So that's why most companies don't do this. Here's your pre-approval letter. You look pretty good. It's loose. We looked at a couple of things, but it's not a commitment. We will go that extra mile up front so we don't run into any roadblocks. We can offer the commitment letter upfront to the listing agent and the seller, which means you can waive your mortgage contingency if you wanted to be hyper competitive. We get ahead of all of your bank statements, your W-2s, your credit report. Everything's been, rubber stamped. It all looks good from the underwriting perspective. So that means we just have to worry about, is the title clear? And if we don't have a guaranteed value certificate on the home, we would just need the appraisal. So it really shortens the time period that you need. And that's everything that you can do to make yourself look the best in the seller's eyes. You can imagine if, everybody and their brother has a pre-approval letter, generally speaking, they're all going to be about the same. If you come with that golden ticket, you're at the top of the list, especially if I speak to the listing agent and say, listen, this is where, Mr. and Mrs. Smith, this is what their offer looks like, and this is where we are in the process. It just makes it so much better.
I mean, it's really important to have a good offer. Like with Jon's part of the transaction, your job is to make a good package to send to the underwriter, so they have a good story to see how qualified the buyer is, the borrower, and be able to move it forward to closing. My end of it is to put together a good package to the listing agent and the seller to make sure that your offer stands out among the others. And really, in a market like this, I'll give you an example. I was at a showing the past evening, and my buyer is cash buyer. She's a solid buyer. She was going to put a big chunk of money down, and she went over asking quite a bit of over asking, and she still didn't get the property. So we're going back to probably like last spring. We're going to have a really good seller's market. It is still a great time to buy if you find the right property. It's always a good time to buy if it's at the right scenario for yourself and your family. But having that approved to move certificate, you might be able to go up a little higher than the cash offer because they're limited to what they can go up to. John also has other good programs that will guarantee the rate, and then there's
Guaranteed value as well.
yeah, that one.
Yep.
That's also a huge advantage to put in your offer in. So you really have to be very strategic in this kind of market and getting your offer accepted. But not to say the least, it's also a gamble. You don't know what the other offers are. You don't know what the conditions are. You might have somebody that's willing to wait 3-5 months for a closing to give the seller time to move and find a property. So it's a gamble. You can't blame your agent because you didn't get the property. It's ultimately up to you how much. I always tell my buyers, put in an offer that you're comfortable with spending on the property, and comfortable enough if you have to lose it, you did your best.
Right. Yeah. So that kind of brings us back to the beginning, right? When you have a pre-approval letter and you're very early in the stage, we have to send out some paperwork that gives you an estimate on what your interest rate's going to look like, what your closing costs are going to look like, so you can see your bottom line monthly number. As we go through the process and you start looking at different properties, that's when you would speak to myself as a lender and you start putting in specific numbers to specific properties that you may be interested in, right? And so those numbers are going to move up and down. When you go to make an offer, even if you've already gone through underwriting, you can still manipulate that loan file and say, hey, I like 25 Main Street, right? I'm going to make an offer of X amount at 10% down or whatever it may be. And then I put all of those numbers into the system and give you a readout. Here is exactly what this is going to look like. Here is the rate as of today. If if this gets accepted, this is exactly what you're going to see. The only unknowns are maybe a couple $100 here or there on the closing costs, and also your insurance, right? Because some people have special coverage on insurance. So I don't know exactly what that's going to look like, but I can give you a very close estimate. So that's the best part about, going through this process. You have done your homework. You've got your pre-approval. You go through underwriting early. So if you hit any speed bumps, you can pivot, go down a different direction, use a different loan program, whatever it may be. You go to make that offer. You speak to both your agent and your lender and you say, this is the details that I would like to present. You can go with options at that point. Do you want to discuss buy downs? Do you want to do an appraisal waiver program? Do you want to look at 5% versus 10% down? Are you going over asking? How do you want to structure this to get the best deal for you, but also win the contract? Because if you can't go so thin all the time, you need to make sure that everything works out appropriately.
Yeah, it's a tough when you're putting an offer in. Like I said, it's a gamble. You just don't know. But the big question I always get the buyers is like when they didn't get their offer accepted, and they want to know, well, what was the amount that got accepted? Well, legally that can't be disclosed. So your agent can't tell you. The listing agent can't tell you. When there's multiple offers, you can't ask what the other offers are, because then, what's the sense of having multiple offers? So it is kind of like a risk that you're taking, but if you really want the property, make sure that you're comfortable again with the best offer that you can put in, but also comfortable enough if you lose it, you did your best.
Yeah. Well, that's kind of the reason why we introduced this Approved to Move Plus program, right? Because when you start to get you get to the point where you're trying to make an offer on the property, it is a shot in the dark. Let's say the listing is 500,000, right? Is it going to appraise? We don't know, right? And so if it comes in short, you have to manipulate your offer or put more money down or renegotiate, whatever it may be. And you don't want to go on the flip side of that either. You don't want to overspend on a property.
Right.
So if the MLS number, the listing number, is available and it has enough pictures, the description is good, we can actually say, let's say you're going in at 500, 490, whatever the number may be, it's listed at a certain amount. You go in either higher or lower. We can say, based on your offer, we are going to guarantee that particular value, right? And so that way, that you're not overspending. You know that if the appraisal comes in short because of, let's say there was a foreclosure 2 weeks ago on a different property down the street, it's not going to affect your value. So we have that locked in stone. That's a really good part of negotiating your offer as well. If you say, I want to offer 10 over ask and we can't support that value, I'll tell you, you can still buy it for that. However, you're going to be overpaying, and you have to realize that you're going to be doing that, and vice versa.
Yeah, I mean, the market is still very hyper for sellers. Do I see it trickling down? Probably not anytime soon. We're also going into an election year, where that starts, and that's going to determine real estate really has a big impact on our economy, and elections and stuff like that really do affect our business. So there's a lot of factors. So you really need to listen to the professionals that are helping you. I've said this before in our series. When you're buying or selling a house, everybody and their mother becomes a loan officer and a realtor. And they're going to give you all their opinions. And you have to understand what they went through, whether it was last year, 6 months, 20 years from 20 years ago, that was specific to them. Everybody's credit, everybody's mortgage is specific to that person. Everybody's home purchase or home sale is specific to that person. Everybody hears the horror stories, but they don't hear the good stories, and you can't compare what your transaction is to somebody else, because the truth is they're not telling you the truth. The people that are telling you, they're not telling you all the details, because nobody ever wants anybody to know their details, their dirty laundry with their finances, so there's always something that comes up. It's a given. It's very rare when it doesn't. And you're not hearing that end of the story. You're just hearing their frustration on something that might have happened. And usually I find it's usually because somebody wasn't telling the truth about something that with their home or the buying of the home. And there's always underlining stories that you're not really hearing about. And you can't go by when somebody bought a home or sold a home 20 years ago. That was even 10 years ago or a year ago. It was a completely different market, and mortgages were completely different. And I remember years, oh my God, I'm dating myself, back in the late 80s, early 90s, there was net sales. That's illegal now. But so there's things that have changed over time, that we learn from our mistakes, or the government learned from our mistakes. And you have to really listen to the professionals that you're working with, because you hired them to help you. And we do this day in, day out. We've been doing it for a long time. We're not emotionally attached to the transaction, so we can kind of see things at a better perspective than you can, because buying or selling a home is a very emotional transaction. No matter how you want to look at it, it always becomes an emotional transaction. Whether you're selling, you're emotionally attached to the house. Maybe you had bad memories, good memories, who knows? Or when you're buying, you're emotionally attached to the house you're going to buy. And so it's a very odd transaction, but you really need to listen to the professionals that are helping you.
Yeah. 100%, because there's a couple of things that I'd like to touch on. So you said, you're going to hear it from everybody has an opinion, right? So generally speaking, their transactions are going to be different than yours, right? You're not going to have the same house, the same neighborhood, the same mortgage program, the same rates. It changes all of the time. And so that's why, you can start off with very basic information, like a pre-qualification, maybe even a pre-approval, but that stuff is very loose. Everybody's going to have one because they're easy to obtain. And then if you go under a contract with the pre-approval, that's when your underwriting begins. So you wouldn't want to run into those particular potential problems during that transaction, right? Because there's contingencies on the line. You have to get your financing in order. You have a certain amount of time to do the inspections and things of that nature.
Yeah, it's once you have your offer in and you've gotten your pre-approval, your pre-qualification, you've gotten everything, like you've got all set and you're solidified on the mortgage end. You have to write up your contract. I don't like to call it an agreement, because it's really not an agreement. It is a legal and binding contract. Whenever I start a conversation with a home buyer, I always tell them you are signing a legal and binding contract, as well as a seller. Can contracts be broken? Yes. During the contract phase, when you're through the transaction, what happens is you have multiple times to renegotiate. And that's your inspection time. Maybe it's appraisal didn't come in. you could be able to renegotiate with the seller at that point. Keep in mind, the seller doesn't have to do anything when you have a home inspection. The seller doesn't have to fix anything. It's a big misconception I find when some buyers, like, they want everything on the home inspection report. Well, you know what? It's like buying a used car. It's
Right.
been driven before. It maybe they're not putting maybe they had a lead foot. They're putting a lot of heat on the heat. They're using all the lights all the time. They're really that seller's actually excessively using the house. You might not be. You might not have a large family, a lot of people living in the home. It might just be you, a partner, who knows. But that seller, and what I always find a lot too is that people will always say, well, the seller knew about this, they knew about that. Sometimes they don't know, because when you're getting a home inspection, that home inspector is putting that house through the test. They're running that water the minute they walk into the house to make sure there's no leaks. Do you do that normally in your house?
Let every faucet and tub run for an hour.
You're running all the appliances at once, stuff like that. Nobody does. So you're really putting everything to the stress test. Same thing with the septic system. You got to make sure it gets, inspected properly. But the thing is, I find that buyers just assume that the seller has to fix everything. In a hypermarket, more than likely they're not going to, because they probably have 5 or 6 backup offers. It's not going to happen. So you got to pick and choose your battles, really. I mean,
and so let's clarify too. So this is this is after the seller's picked your offer, right? So now you're in that, what we call the inspection period. So as a lender, like, we don't require the inspection. Most times we require the appraisal. The inspection is just for your knowledge, right? And like Vickie's saying, they're going to go through, or they should, if you have a good inspector, go through the entire house, all the way down into the crawl space. They're going to get dirty. They're going to go all the way up on the top of the roof. They know a little bit, or I shouldn't use the word a little bit. They know a lot of things about a lot of portions of your house, but they are not, usually licensed roofers or chimney inspectors, that sort of thing. So, they're going to say, okay, that looks a little off. Get that inspected more. But they're going to pick apart the house so that you know what you're buying. It's like bringing a used car to a mechanic. That's the, like I say to everybody, I'm not a mechanic, so if I was going to go buy a used car, somebody else has got to look at this thing and tell me if I should buy it. And then the appraisal is simply, is it worth what you've offered to pay? Right. So those people are, those two things are very different, appraisers and inspectors. They do kind of the same thing, but for different purposes. And so, that inspection report, you can renegotiate. But as Vickie said, if there's a lot of other offers that are out there, you don't really want to rake the seller over the coals for, every little thing.
Yeah.
If there's big things, the roof has got, evidence of leaking. Let's say the furnace isn't working or hasn't been, tested or inspected in years, or whatever it may be. If those big ticket items, that's what you want to pay attention to.
Yeah, you do. And, when something does come up during a home inspection, that's when we call the professionals in that field to further evaluate. The seller has the right to make those repairs if they want with their own person. You can't request that they use this person or that person. You can request anything, but honestly, if I was representing the seller, I would squash that right away. But the seller's going to fix whatever that needs to be fixed. They might not even know something's broken that severe. You just don't know. And it could be a surprise to them as well. And you don't know the seller situation. They might just be making its bare minimum of breaking even or having to bring money to the table. So there might not be any money for repairs. So there's a lot of factors that go into. So I always say, don't assume what the seller knows or does not know, because sometimes a lot of this is a surprise to them as well as appraisal. I get the same thing with buyers. They think the appraiser is going to go in there and do a home inspection. The appraiser's in there to see health and safety issues, any visible defects such as bad roof, like Jon said, peeling paint, if you have FHA loan, VA loan, if railings are missing, certain things. There might be, it drives me crazy, and I'm gonna, maybe some appraisers are gonna hate me right now, but some of them start quoting code on steps and stuff like that, and that just drives me up the freaking wall, because that code might not have been in place when the house was built.
Right.
Well, that's when you need an experienced realtor on your side to know these things and to fight it. So I've fought many appraisals. I've fought inspections. I've been through hundreds of inspections, maybe thousands. And, you learn over the years things. And, I've questioned inspectors at the inspection saying, well, to me, that doesn't seem like an issue, and sometimes they miss things, sometimes you get an inspector, they miss things. And if you want an inspection, there's things that are concerning you before that inspection, write it down, make sure you ask the inspector to look at it just to put your mind at ease.
Right.
And
Yeah.
you don't want to send Jon the inspection report.
Yeah, no, I don't want to see the inspection report at all. I want an appraisal to make sure the value that you're offering is legitimate and supportable, and that's basically it. Yeah, I mean, so I guess we can kind of go into the different loan programs a little bit here based on these things, right? So we have gotten the pre-qualification, pre-approval. We've gone through underwriting. The offer is now accepted. You're in your inspection period. What's it normally? 10, 15 days on most contracts?
For 10 business days, excluding 10 days, excluding weekends and holidays. That's what it is.
Yeah.
Rhode
So
Island.
you get a certain amount of time to go through and have somebody kind of poke around a little bit. Like I said, I'm not an inspector. Vickie's not an inspector. The buyers are most likely not an inspector. So you want somebody to look at this. Their job is to tell you every single thing that is going on with the house. And if you've ever gotten your car inspected, it'll say, average, good, very good, bad, whatever it may be. It's kind of like every little bit, a little checklist, and it goes through every room and everything. So it gives you a baseline of what you're buying. Now you can go back to the seller and say, these are the big ticket items that I want you to consider. And like Vickie said, they don't have to do that. They don't have to do anything at all. But this is where
word consider.
Yeah, right. But this is where seller credits in some case, comes through. I usually have, shouldn't say usually, but there have been instances where you would have an inspection report, and I don't have the appraisal ordered quite yet because we don't know if we're moving forward, where the buyer now renegotiates. I want $5,000 back because I need to fix X, Y, and Z, or whatever it may be, right? Maybe there's a little crack in the foundation, or, they need somebody to go out and do another inspection, and they want the sellers to pay for those things. So that's where you renegotiate. Hopefully you renegotiate and then you decide to move forward. Now at that 10-day period, your inspections are over, and now you can go into ordering the title and ordering the appraisal. The appraisal is something that the lenders do care about. So this is something where if you're depending on the loan program, so that what we call the government loans, the FHA, the VA, and the USDA, they're a bit more strict. As Vickie said, health and safety concerns. They want to make sure that there's no lead paint. They want to make sure that there's no asbestos. They want to make sure that there aren't any trip and fall hazards. Like let's say there's no railings on the stairs or any sort of thing off of a deck, right? Things like that. They want to I've seen appraisals where there's a door to nowhere, right? You know what I mean? On a second story, you open that thing up and you fall out. It's crazy.
I've seen.
Or there's,
and to go reiterate about the lead paint and the asbestos. We have a lot of old homes in Rhode Island, dating back to the 1600s to 1900s. Like and anything built before 1970, I believe 78, 9. I was 1 year off. Most likely has lead paint or asbestos. So usually you'll find that stuff in the old tiles, those pink tiles, the yellow tiles. The paint, there was lead paint. Yeah, there was lead paint in the paint to do the tiles. And then in the flooring, they used asbestos glue. And then there was asbestos shingles. Now, that's not all bad stuff, as long as it's intact. So it can't be chipped or flaking. So if you're really concerned about that, I suggest getting those things inspected. You probably will find that stuff in older homes. It's given, but at least you'll know where it is. And the big thing is you want it to be encapsulated properly, so there's no issue. So I just wanted to put that out there.
Yeah, absolutely. And so as long as the inspector will probably notate these things for you, right? Based on the age of the home, it's likely that the paint or whatever is lead, right? So let's say it was painted in 1960. It's been a very long time since it's been painted, but who knows if it's been painted over and over and over again, right? As long as that stuff is, what Vickie said, is encapsulated or sealed, where it's not chipping or flaking off, it's not a big deal. But that's why the FHA, when the appraiser goes out and says, hey, there's some chipping paint over there, you need to get that scraped off, cleaned up, and repainted. It's because of these safety issuos, right?
And they will flag a house for that without a doubt. And railings. I mean, as silly as you might think, maybe it might be a windowsill that's chipped. as small as it might be, they will flag it.
Right. And that's why conventional loans are a bit more popular, right? Because they're more of an as is, condition. I bought my first house where we were under a conventional loan specifically because I knew the house had some problems, right? The roof was a little bit older. We had some potential asbestos flooring in the basement. The house was built in 1955, right? So it was an older home. So we went conventional so that we didn't necessarily have to deal with these things on the appraisal, right? So you can kind of choose your loan program based on the type of home and what kind of offer you're writing as well.
Which is very important too, because like if you're listing if an agent's listing a property and they know this house isn't going to pass FHA because of these issues, and the seller does not want to either repair it or might not have the means to do so, you're not going to get the house with an FHA loan. You might get it with a 203K loan, but that's a whole other thing.
That's a whole other thing. Yeah.
That's a whole other thing. And you have to know somebody that knows how to work it right. And that's a whole other avenue. I don't think 203K loans really work well in this kind of hyper market for sellers because you're already up there in the value, what you're offering. So there's not a lot of wiggle room.
Yeah. The 203Ks have become really popular because there's a lot of homes out there that will want to be changed. So let me back up. So the 203K is a renovation loan under the FHA, and conventional loans have the same thing. So if you find a house that is maybe a bit, in disrepair, right, you would need to get that fixed up in order to purchase the house under some programs. And a lot of people will take that older home that needs an updated kitchen, bathroom, maybe they need an addition or whatever it may be to suit your needs. You can do that, but it requires a lot more effort. You have to get a contractor and a builder in there, sometimes a consultant, our renovation support team to help make sure everybody's on the same page. And we can lend a certain amount of an after improved value. So if you find a deal on the market that needs a little bit of work and you want to use one of these renovation programs, let's say it's a 300 purchase price, you put 100 into it, now it's worth 300 plus 100 and maybe a little bit better, 425 or 450 because of your improvements, we can lend up to that higher value. So it's a really good loan program, especially for those homes that are in disrepair or, something that's just a little bit older.
Yeah, I mean, it is a great program. I've had clients that have used them quite a bit. It is a great program to make the house the way you want it. And the thing is with the renovations too, you can't be your own contractor. Can you use your Uncle Joe down the street or, so how does that work? How do you pick your contractors?
Yeah, that could be a whole nother episode on the renovation loans.
So, but now we have your offer. We put your offer in. You have your financing that you picked. We're under contract. We have our home inspection. We do our appraisal, and now we have to do title search. So the title.
So this is kind of the side that because most of at this point, most of the transaction starts to go through the lender, right? So you're under the contract now, you've gone through your inspection period. If you come back to me and say, hey, John, the inspection went awesome. We got $5,000 from the seller because of whatever. I need an addendum. I put that back into the contract. Now we have a really good loan. So now I say, hey, now it's time to lock your interest rate. Okay. Over the time that you've been shopping from pre-approval to the day you go under contract, you're floating with the market. Most programs got rid of their lock and shop because of how volatile the market is. So we're going to say, okay, on today, the interest rate has either gone up or down or whatever it may be. Here is your rate. We can use discount points from the seller. Maybe you take that $5,000 credit and you pay it towards your closing costs, or to do what we called a buy down previously. So let's say the starting rate is, I'll just throw a number out there, 6.00, so 6%. If you have enough money, you can do a 2-1 buy down. So now you start year one at 4%. Or you can do a permanent buy down, right? Because the regular buy downs are temporary. You can use some of the seller credit to have a permanent buy down. At this point, we're going to be talking about ordering title, ordering the appraisal. So there are multiple third parties that get introduced at this point. most of these will be written into the contract itself of who's going to be doing the, the attorney work, the settlement, all the title stuff. And if you've already gone through underwriting, at this point, you sit back and you say, hey, great, I'm all set. Now it's simply the house, right? Appraisal, title, and closing. We can do something in, I would say, 2.5, 3 weeks if your underwriting's already done, and get you into the house right away.
Now with the appraisal, I want to put out there, a lot of buyers will ask, well, do I get to be at the appraisal? The appraiser is supposed to be objective. They're not supposed to be having conversations with the buyer's agent, the listing agent, unless there's an issue. They might reach out to us and ask us, or maybe the price, they can't find comps to bring this house to value. They might ask the listing agent, what comps did you use to come up with this number?
Right.
They might ask the buyer's agent to come up with comps to evaluate it, because the way the market is right now, it's so fluctuating that is an issue. It does come up. So you're not allowed to call the appraiser and tell him, I think the house is worth this. You should price it at this. The appraiser's not supposed to talk to anybody. Those days are long gone.
Yeah.
They're randomly picked. Whatever.
Yeah, that's a good point. I don't even know who the appraiser is. I click a button on our side and it says ready for appraisal, and they have a copy of the purchase and sales contract. They go right to usually the listing agent, and that's how it's organized, right? So I don't even know who the appraiser is until the report's back.
Yeah, the buyer's agent does it. We just know it's been done. We don't even get to talk to them. But if you're selling and you have a good listing agent, they're going to be there to meet that appraiser and not just to give them a lockbox code to get into the house. Because I want to show the appraiser all the improvements of the house and what's been done, and I want to explain the house to them. And I'm going to bring comps. Are they supposed to take them? No, but I'm going to bring my comps that I use to value this house. So if you are selling, you do want your listing agent to be at the appraisal. I don't care what anybody says. You should be there. I know there's some agents that are yelling and cursing at me right now, but you're getting paid to do that job. Do it.
Yeah. But this is another reason why the guaranteed value certificate is so nice, because let's say you get an appraiser who does this part-time or doesn't have good comps or has a bad day, right? These appraisals are opinions of value. You're going to have 10 different appraisals done. You're going to have 10 different values, right? So if we can do the guaranteed value certificate, we still have to get the appraisal done just to have it in the file for paperwork. But if we're going to guarantee a certain value based on the offer that you put together, then we don't even need the appraisal. So that's the best part of the whole thing. That's another reason why you can kind of say, my underwriting's done. I don't even need an appraisal. The inspections are over, right? So now it's clean title and closing. So it's another, you're already 90% done before you even put pen on paper, for that contract.
Right. And then what's going to happen next is that you're going to have your title, make sure there's no liens on the property. And that's the seller's issue. The seller has to take care of any liens on the property. They can't convey it to a buyer without clearing the liens. And a lien can be past taxes, maybe you didn't pay your car tax, your town tax, fire tax, medical bills, credit card bills. There might be other stuff, income taxes that might be attached to your home. And sometimes the seller doesn't even realize it and it could be a mistake. It's just that something wasn't removed properly, especially back in foreclosures. A lot of those deeds were not recorded properly by these banks. And, there's some issues with the title that has to be cleared in order to convey the house. This might delay your closing because not everybody else is on our timeline of the contract. So when you're dealing with all these other parties within the transaction, this way a little bit of maneuvering comes about. So that date on your purchase and sales contract is just a date to make it legal and binding. Right. Don't tell your landlord you're vacating your property that day, because we hear this all the time, right? Yeah. I have to move. I gave my landlord notice. Don't give them notice until you have a clear to close.
Right. Yeah, exactly.
Here, clear to close.
Because, and let's not scare people either, right? So 90% of the time, titles are clear, right? There's usually no issue. But like you said, I'd even add, let's say mechanic liens, right? So let's say some contractor out there, the seller or even the previous owner had some work done where they never got the permit closed, or they forgot to pay the last installment or whatever it may be. So those are things that you don't want to, encumbering your title either. You want this thing to be clean and done. And so that's what the title search is going to do. Make sure that nobody else has any sort of a claim of ownership on your property. And so that's why that portion of title is very important.
Yeah, absolutely. And the title insurance is very important to have too, because it will kick in if anything happens that happened previously before you bought the home. So
Right.
you have to listen to your attorney that's advising you about this stuff. I personally would never buy a home without title insurance. I would never advise anybody to buy a home without a home inspection. If I was buying a home, I would get a home inspection just to get a general idea of everything.
Yeah.
Um,
Yeah, even if you're not going to use it to negotiate, right? Just have it. It's $500 in
yeah.
most cases. Have that report. It's very thorough, and assuming you have a great inspector.
Yeah, I mean, you get things that you don't see, like, the electrical box, when the inspector opens it up, sometimes there's like mouse droppings in there or some water leakage that, what came from outside, nobody knew about. So
Yeah.
there's things you can't see. So you want an inspector to go in there and really like see the unseen that you can't see, which just by walking around, because in this market, you're taking buyers in, they have all the 15, 20 minutes to look at the property, and then they got to go make a decision.
Right.
So you don't have a
Right.
lot of time. So inspections are really important right now. And then you can also negotiate with a home warranty. If there's just a lot, little things, but you're not concerned about it, but it might come up down the road, ask the seller to pay for a home warranty that will warranty certain parts of the house. There's certain packages you can get. If you have a pool, you can put that in there, a sauna, roof, appliances, stuff like that. So that's always a good thing to have, to ask for maybe. And it's a cheap way out for the seller, but it's a peace of mind for you. I personally, when I bought my home, I had a home warranty. The day I moved in, my water tank went. I
No way.
my furniture in, and I use that home warranty. I paid the fee. I think it was like $100, the administration fee.
Yeah.
I picked my own person. I called my plumber, came, changed it out, and it was covered.
Yep.
So there's so many other things that you can ask for or maybe negotiate in the transaction. So don't it's very overwhelming when you're going through this process of the transaction, when your lender's asking you for information, the attorney's calling you, you're dealing with appraisal issues maybe, or the attorney's asking you questions, and you got the home inspection. It's like it's a lot. We
Yeah.
do it all day long, so we're used to it. So we know how to negotiate these things and make them work for you.
Yep.
Or, if say all these things happen and it's just overwhelming for you and you just don't want to deal with it, this is the time when you can back out of your contract and get your deposit back. So if you have a bad inspection, it's not satisfactory to you and it's just too overwhelming, and you just don't want to move forward, that's the time that you can back out and get your deposit back. Maybe the appraisal came in too low. The seller doesn't want to lower it. That's the time you can back out and get your contract back. If you're with Jon, you're approved, so you're approved, so you're not going to get a denial letter. So
Right.
unless you do something stupid,
Right.
you know,
Right.
like go buy a new car, furnish your house and put it all on credit, or lose your job, something like that. But there are certain times you can get your deposit back. But once you got that commitment letter, which I want you to speak about next, Jon, that's it. You're committed. You're moving forward with the property again, unless certain things happen that are out of your control.
Right. Right. Yeah, so let's kind of recap again. So pre-qual to pre-approval. Pre-approval is very loose. So we went through the approval process called approved to move. You've been looked at by the underwriter. Income, so W-2s, pay stubs, your credit report, your bank statements, you've got the cash. It's all been, rubber stamped. So now you're under contract. You've done your negotiations. The inspection is good. Maybe you got a little bit of money back from the sellers for a few small things. Now the appraisal comes in. The appraisal is good, but you've gone and gotten your guaranteed value certificate, so it doesn't matter anyway. It's just another piece of paper that you can have with your file. And then we also ordered title. So the title is clean. You've got your clear to close from the title company, right? So their portion is all done. We have still a few things to wrap up on the underwriting side. So you've got your commitment, but it's usually conditional. Like it's subject to a clean title, subject to potentially a clean appraisal, subject to one more pay stub, maybe a refresh of your bank statements, that sort of thing. And then as we get all of that wrapped up, then we can issue what's called our clear to close, or the acronym I abbreviate UWCTC, underwriting clear to close. Those are the magic words, right? You are good to go, right? And so Embrace likes to do this at least 7 days prior to your closing, right? So you'll have final figures. You'll be balanced with all of the attorney fees, all of the title fees, the appraisal fees. Everything is on one piece of paper called the closing disclosure. So you can go and look at that with a fine-tooth comb. You have an explanation on every single line item, and there'll be a number down at the bottom that shows you what your interest rate is, what your lock period is, how long the term of your loan is, how much money you have to bring to closing. Everything will be finalized here. If your loan officer does not go through this with a fine-tooth comb with you, ask them to do so. It's their job, so you know exactly what you're paying, right? And then that's it. You're simply waiting. You're hurry up and wait. It's waiting until the closing day. You really don't want to hopefully get that closing disclosure, 3 days prior to closing and have all these numbers changing. You want to try to get this all done ahead of time. So
Right.
that's kind of the fun part of the process. You've done everything up front, so you don't have to stress about it. Get your, mandatory stuff out of the way, and then you're ready to close.
Yeah. And then, what happens is your attorney will reach out and ask you when's a good time to close. Now, keep in mind, you've got another party involved with this. So you have a seller and,
Right.
and whoever's signing on that end. So although it's about you, it's not all about you. And
you're only half of the equation, right?
Everybody has to bend a little, to make it happen. And sometimes this, you might sign prior to the seller. Sometimes you might all sign together in the same room. It all depends because everybody's got so many different schedules. So it's hard to bring it all together sometimes, but we make it happen. You have the lender that has to send the packet to the attorney. Then they got to run it to the other attorney on the seller side, make sure all those numbers are correct on both sides. So it takes a little bit of time. That's why Jon likes to do it, days before. So this way, everybody has time to do all that stuff. So,
yeah, because you have to either get a certified check from your bank or set up a wire transfer, right? Because you can't just 9 times out of 10, they're not going to allow you to write a personal check, right? It's not, it's not secure enough, and they don't have.
Not that they don't trust you, but they don't.
Yeah, it's like, I'll write you a check. Don't worry about it. Right. So the funds have to be certified. And I usually go to 9 out of 10 of my closings, right? Because you're going to have the attorney there that's working for you, but they're facilitating both your purchase and the sale. So it's kind of 2 transactions for them in one. So I like to represent my client just as anybody would, and be there in case there's any discrepancies, or let's say they thought about something between the last time we spoke and closing day. And purchases table fund, which means that you're going to get the keys right away. So if there's anything that's wrong with that document, don't sign it. You definitely don't want it, because you're not going to be able to make changes after the fact. So
and it happens. Sometimes there's a typo or something. We've had it. That's why you want to close at your attorney's office so they can make those changes quick while you're sitting there.
Right.
And right before, when you get that clear to close and we have the closing time and the date all set and everybody's on the same page, my end of it is we're going to go view the property and do a final walkthrough prior to closing. So it's usually an hour or 2 before we go to close. The reason we do this is anything can happen. What if there was some cold weather and the heat wasn't turned on all the way, and you get there and all the pipes burst? And I'm saying that because it's happened.
You get that with a lot of the sellers who are out of state. Like let's say they have a second home or something like that over here that they're selling. If they're not there, anything could happen.
Yeah, and it's happened to me. The whole so these I've seen a lot over the years. Maybe the house got vandalized, maybe it got broken into. So we always want to go an hour or 2 prior to closing to make sure everything is okay the way that it's supposed to be. You're going to sign off that you're satisfied, and then we're going to go right to the closing.
Yep.
And usually if you close on a Friday and there's a holiday on a Monday, the deed will be recorded on Tuesday. And that's when the seller's funds and everybody's money will be released when the deed's recorded. That's the other words you want to hear: the deed's been recorded, because now it's really official. It's your home, and hopefully you're happy with it and you're happy with the service that was provided to you.
Yep.
But I did want to discuss real quick, because we went a little over, but this, like we always say, it's always so much to talk about these certain circumstances.
Yeah.
When you are putting an offer in, especially in this hyper market, you want to maybe think about an escalation clause as well. When this all started to happen, when we had the crazy market last year, maybe the year before, a lot of realtors didn't know what an escalation clause was, sad to say. I put a few in, and I had comments like, "What is this? This is illegal. This is not fair." So I'm swear to God. Real estate 101, folks. So an escalation clause is, so say we'll use 500,000 as a given. So the house is 500,000, you're putting an offer in at 505. There's multiple offers, but you're willing to go up higher based on the highest offer. So that, say the next offer, highest offer is 510. You're willing to go over maybe 5,000 more above the highest offer. It is perfectly legal. You can do it. You just need somebody on your side that's smart enough to know this.
Right. Yeah, because it's not common. I shouldn't say it's not common. It became more popular, right, over the last 2 years in a hyper competitive market. I had a really close family member that actually won their offer because of this escalation. And I told them about it. They had to go to their agent and say, put this in the contract, right? So,
Yeah.
They were starting off, like you said, at that 500. I'm just going to throw a number out, 500. And there was multiple offers that were slightly higher. So they went actually, like you said, 5,000 above the best. So that way you don't have to keep on going back and forth. You just ratchet it up to your ceiling, your limit. And as long as you've discussed this with your agent and your loan officer so that you're still approved at that level, it's a really nice way to automatically increase your bid. Think of it as like eBay, right? You're bidding on something highest and best, you're going up every single time.
Right. Yeah. And it's really a great tool to use when you are putting an offer. And when I put an offer in, I like to have it all in one package. I like to submit an offer how I like to see it when I have a listing. So I usually have a cover letter explaining what's in the offer, and it's on how they receive that offer is all in one PDF file. I don't use the signing programs agents use back and forth and send it piecemeal to the agent, because me, when I'm listing and I get it like that, it's very frustrating. Ask your agent how they submit the offer. It's very important, because if you have an offer being put in piecemeal and sloppy, me as a listing agent, I'm going to think, okay, this is how this transaction is going to go. This person on the other side is going to just like, they're throwing spaghetti against the wall, waiting for something to happen. Ask your realtor how you submit an offer. Ask for an example. Ask to see obviously you can't see all the details of the financing, but ask for a sample on how offers are put in. I do a cover letter. I talk a little bit about my buyers, their qualifications, how they like the house, thanking the agent for letting us see it, thanking their seller. I'm being very nice, and it's all in on my letterhead. I include the loan officer in on the offer and their contact information, and I also include them on the email that I'm sending. However the agent wants to see the offer submitted, that's how I submit it. Pay attention to details, agents, when you're submitting offers. And I include that loan officer in on that email when I'm submitting that offer. So this way I make it very easy if the listing agent or the seller wants to talk to the lender to see how qualified the buyer is and if they have any questions about their loan that they're getting.
If your loan officer is not calling the listing agent, that's a huge red flag. You definitely want them to introduce themselves and also introduce you, because you're the person that's kind of controlling that pre-approval. I get the question all the time, is this, they say pre-approval. I said, oh, no. We're already through underwriting, right? So this is at the offer stage. This isn't even under contract. This is you've made an offer. Mr. and Mrs. Smith have gone through underwriting. Oh, really? I didn't know that, right? With Vickie, she's going to let them know right away. This offer is solid. It's gone through underwriting already. And as you mentioned before, you put everything in one PDF. So they have to open up everything rather than piecemeal where something might get missed.
Yeah, and keep in mind, everything when your agent sends that offer in one PDF, everything that's in that packet is part of the offer. So if there is say you like the lighting, the chandelier, don't assume all those things come with the property.
Write it in.
The property, it's supposed to stay with the property, but some people get attached to certain things. There might be Granny's old chandelier and they want to bring it with them. That should be disclosed ahead of time. Or say you like the drapes, they're custom drapes and you want them to remain. Ask for them to remain in the offer. I usually like to leave a lot of that stuff to negotiating after the inspection, because I think if you're asking for a lot of stuff an initial offer, I think that turns off a seller unless they're going to leave it. Like custom made drapes, they're custom to that window, but you don't know where they're moving to. It might be the same size.
Right.
I tend to think a lot of sellers get a little aggravated when they say, oh, they're asking for this, they're asking for that, and it's a very emotional kind of conversation to have with the seller. Not all of them. Some of them, they treat it as a business transaction and it's cut and dry. But say you want the washer and dryer, they might say the appliances are included. Make sure your realtor puts that in the offer. I know when you're putting an offer in on the contract, John's side of it doesn't want to see that this is being exchanged for any money. So there's certain verbiage that has to be in the contract stating that it's not being conveyed for any monetary value. So ask your agent how they put offers in. You should be seeing what a purchase and sales agreement looks like, purchase and sales contract looks like prior to signing it.
Yeah.
You should not, especially in a hypermarket like this, you should not be signing contracts on the fly and not knowing what they are. You should be able to see what they are. A good agent will send you drafts of what the contracts are that you're going to be signing up ahead of time, so you're not surprised later down the road. And they should be sitting with you and explaining it and going over it with you. I know when it's a hypermarket, you got to send things over quick. So if you already know what they look like prior to, it kind of alleviates a lot of issues. I always like to sit down with people. If they can't meet me in person, I like to do a Zoom with them, share my screen and go over it with them and do it that way. So you really need to have somebody that is experienced and does understand how all this works.
Yep. Yeah. So I spoke to a first-time home buyer just the other day on Saturday, actually. So they had no idea about anything, right? The first time doing anything at all. So I had to go through what is a pre-approval letter and why do you even need it, right? Why is it important to actually go beyond that pre-approval? How does that make you a better buyer? Who is the agent? What do they do for you, right? So you really want to make sure that you're leaning on these professionals, an agent like Vickie, a lender like myself. If you need to choose a title company or an attorney, we deal with this all the time. So that's when you would lean on us for a referral or a recommendation, right? The appraiser, we don't get to choose. You can choose inspectors. If you don't have one, then you can lean on us again. So, you just want to make sure that we are available to you. I got off the phone with another client who was going through the bank and they're like, I can't reach my loan officer. Well, what time is it? Well, it was 6:15 on Thursday. Well, it's after 5. They're closed, right? You're not going to catch them on the weekend either. So you want to make sure you have all of your people in your corner who are available as well.
Absolutely. Now, I think we went all over like a lot of the detail. And the happy thing is you got the closing, you have your home, and you're in your house.
Want to do a bird's eye view again? So pre-qual is nothing's been checked. Pre-approval is loose. We went over credit, assets, income. Usually it's verbal. Maybe I saw a pay stub or a bank statement. Getting the pre-approval turned into a full approval is what you want to do. There's no cost or commitment, but it does put you at the top of the buyer's list. Underwriting is completely done. You don't want to go under contract, winning the bid, winning the offer, and then start underwriting because stuff can come out of the woodworks. The underwriter still has to review it and give the stamp of approval if it's just that pre-approval. So let's get that out of the way. You're under contract, you do your inspections, you do your appraisal, clean title. Now you're at closing. You've delivered the wire transfer or the certified check. You get the keys and that's it. So, if you kind of step back from it a little bit, there's lots of cogs in there, there's lots of moving parts, but, follow that process and it's pretty easy and hopefully not stressful. You definitely don't want to have stress during this whole thing.
No, I mean, I always say everything can be resolved. Everything can always be resolved. And you know what? We've been doing this so long. We become in our industry, our end of it, we become troubleshooters. We're always problem solving. We're problem solvers. We're always fixing problems. And after over time, you end up getting good at it and learn from experience. And nothing is unresolvable. Sometimes it is, and I always say if it didn't work out, it wasn't supposed to be. It was not meant to be. I always tell buyers all the time, if your offer didn't get accepted or a house went under contract before you got to see it, that house wasn't meant for you. And nobody believes me until it actually happens and they find the house they actually end up buying.
Yeah.
It always seems to work out the way it's supposed to be all the time.
I always get the question, oh, what can go wrong? At any given stage, what can go wrong? I'm like, everything. Like, odds are nothing's going to happen. But I mean, I could write you a book on all the potential possibilities of things going wrong.
Oh, absolutely. I mean, we've seen a lot.
Yeah.
I do want to say, if anybody is interested, just put in the chat your email, and I will send you a copy of my book that I wrote, Avoid Overpaying for your home. And I give that out to any buyers that are interested in that. And I also have one for sellers. So this was a great topic. I think it's a big a confusing topic and a very emotional part of the transaction, because now everything gets real.
Right. Well, I always like to tell clients, like, it's a big transaction. You want to do this to, provide a home for your family, build generational wealth. It's something that real estate provides you that most other asset classes don't, right? It's can be a very expensive transaction. So you want to do it right, and you want to do it right the first time. You don't want to be going back and forth and being all wishy-washy and, potentially losing deposits because you didn't understand the contract or whatever it may be. You really want to make sure you understand what's happening and the process. When we break it down into these little boxes, it makes it a lot easier to understand and overcome. Okay, this is step one. This is who I speak to for this. This is who I'm going with for that. It just have us in your corner to walk you through and answer all of your questions.
Absolutely. It's very important to have somebody that's experienced and knowledgeable in what they're doing and advising you, because it is one of the biggest purchases you're probably going to make in a lifetime. And you want to have somebody that knows what they're doing and experience, whether it's us or somebody else. Ask the right questions. Ask to see what the contracts are going to look like prior to signing them. Make sure your realtor is sitting down with you and explaining the contracts to you before you sign them. Make sure your loan officer is explaining your closing statement. Make sure all these things are being done, because if they're not doing it, then there's something wrong. I mean, some people have done this multiple times and they're pretty, well versed in it. But if it depends how long ago you've done it, contract, they've changed the purchase and sales agreement not too long ago. So there's some newer things in there that might not have been in there when you bought a home 10 years ago. So things have changed. Make sure your agent is using updated contracts as well. I know some that are not, and I've gotten offers with outdated contracts, and I'm like, what the hell? Also, when you're putting your offer in, ask your agent, are they putting it on an offer form or are they putting on a purchase and sales contract? I personally like to put it on a purchase and sales contract. I want this offer to be submitted nice and clean. So all the seller has to do is sign it. Yeah. And once they sign that contract, you have an agreement. And that the earnest money deposit's been conveyed. So make sure that you ask how that offer is being submitted. It's very important in a hyper market. I really think so.
Yeah, that's a good point, because I had a client the other day that went under a verbal commitment, right? They presented the offer, right? The offer was signed by everybody. And now we're waiting until Friday to get the purchase and sales contract, right? So it adds layers of potential.
Yeah, somebody could come in and still put it. That offer is not an offer until everybody's signed all the contracts and money's been conveyed. So anybody can come in the meantime, say, put a higher offer in. I just did that the other day. I had a buyer. She told me her offer didn't get accepted. And I said, was anything, she was waiting for contracts. I said, well, maybe we're not done yet. We'll come in a little higher. My buyer decided to back out. She didn't want to play that game, but I went in and said, before I went to my buyer, I said, are you still accepting offers? And the agent told me well, we don't have signed contracts. Well, then you don't have an offer yet.
Right.
So how aggressive is your agent being for you? That's what you have to go look for, because you have to be very aggressive in this market.
Yep. Well, I think that'll probably do it, right? I mean, if anybody has any questions, we're certainly here. Our phone numbers are up on the screen. Give us a call or shoot a text message. None of my consultations cost anything. I'm sure Vickie's the same way,
It's free to talk.
Yeah,
and
absolutely.
Comments in the chat, and we'll get back to you right away. But again, another great session, Jon. love the back and forth and bouncing back and forth about how things work. And we look forward to seeing everybody next week. It's going to be tax season. It's tax season now, so everybody's getting a little crazy. So we're going to probably be talking about taxes and things like that. So we're going to try to get a CPA on here to speak as well. It's going to be a little difficulty because of the time of year.
Yeah. They get a little busy. I wonder why.
I don't know. I hate this time of the year. But anyway, have a great day, everybody. Thank you for tuning in. And thank you, Jon.
Absolutely. If this was helpful, please like, share, and follow, and we'll see you next week.
Absolutely. Have a great day, everybody.
Bye.